Hello there today, viewers. On behalf of the Market 360 advisors here at Stewart Peterson, I'm Bob Davenport, and this is your Dairy Week in Review for August 2nd, 2013. So let's take a look at your CME dairy components at the conclusion of Friday's trade. Block settled up the week here at 177.5, up 1 1/4 cents. Barrels settled at 177.25, also up 1 1/4 cents. Cash butter settled at 144 even, up 3/4 cent. August whey settled at 58.25, down 1/4 cent. And August non-fat dry milk settled at 177 even, up 1/4 cent. Taking a look at Class 3 futures, September settled the week at 18.42 with a 4-cent gain. October settled at 18.41, up just 1 cent on the week. And that puts our 2013 average this week at just 17.79, down 2 cents. So let's take a look at that weekly block barrel average chart. Cheese has been doing pretty well over the course of the past several weeks, and we've been trending higher since this June low down here. Now, since that June low to the current close as of today, the block barrel average has posted a gain of 11 1/8 cents. Now, as I previously mentioned, the block barrel average closed out the week this week here up 1 1/4 cents, and that marks the third up week in a row. During today's session, it was a little bit quieter, however. Block settled the day at just 177.5, unchanged with no trades, and block settled the day at 177.25, up 1/4 cent with 2 loads trading hands. So again, that puts the block barrel average at 177 3/8 to close out this week. Now let's take a look at the weekly second month milk chart. So here we have a weekly chart of September milk. Now the August contract rolled into the front month spot midweek this week, so we saw September roll on to this second month continuous chart. So that adjusted the price action a little bit here to adjust for September coming onto this chart at a premium to August. So based on this second month chart, that second month milk contract put in a high this week of 18.86 and a low of 18.37. Now that second month contract was able to close out the day today at 18.42, posting a 33-cent loss on the week. Now we saw some weakness in the milk market this week due to the fact that feed prices have continued to slide. Now the majority of this selling pressure has shown up in the fourth quarter 2013 months and the early months of 2014. Now as feed prices continue to slide, a lot of that pressure has begun to transfer over into the milk market starting near the end of last week, and we saw that continue into this week. We sold off pretty sharply last Friday, if you recall. Now we rebounded off of that sell-off during the first half of this week. However, the milk market had a lot of trouble sustaining those gains, and we turned a lot weaker here during the second half of this week, particularly Thursday and Fridays when we gave back the majority of those gains. Now we didn't post any huge losses this week. We actually settled near unchanged from the week before, but remember, we sold off pretty sharply to end last week. So the concern here is that if feed prices are continuing to slide going forward, and if the corn market, for example, can sustain corn prices around this level, there's still a lot of room there for a lot of selling pressure to come into the milk market and push milk prices lower going forward. So that's just one thing to watch here as we go into the coming months. It was a pretty quiet week as far as fundamental reports go this week. However, we did have our latest dairy products report released yesterday afternoon. Now that dairy products report showed June cheese production up 1.4% from June of 2012. However, we also saw June cheese production down 3.9% from May of 2013. Now looking at this chart here, from a seasonal standpoint, we tend to put in a high for cheese production in the month of May, and then we tend to slowly decline from that month of May into that August and September time frame right around here before we start to work higher heading into fall. So taking a look at the chart, we saw that typical decline in production. However, it looks like we did decline a little bit more sharply than what we've seen over the course of the past couple of years, as you can see from this decline from these May highs to these June levels here. However, we should continue then from a seasonal standpoint to continue to see cheese production slowly decline now going in again to that August-September time frame. So looking at weekly dairy cow slaughter numbers, weekly slaughter for the latest week reported came in at 55,600 head this week. Now that's down 1,000 head from the week prior, and this marks actually the second week in a row now that numbers have fallen back below the 2012 levels. However, on a year-to-date basis, weekly slaughter numbers continue to track about 2.95% ahead of 2012 numbers. Now, if you previously recall from the last couple of videos here, it looks like we should have put in our seasonal low a couple of weeks ago. This was accounting for that July 4th holiday, and we should see slaughter numbers continue to slowly trend higher here into fall and winter off of that midsummer low. Taking a look at the week ahead, there's a little bit more going on from a fundamental standpoint next week, particularly on Tuesday. So Tuesday morning, we should see the results of the next Fonterra Global Dairy Trade Auction, and also on Tuesday, our next dairy exports report will be released. So tune into next week's video for a recap of both of those. And that'll do it for us here today. On behalf of the Market 360 advisors here at Stewart Peterson, I'm Bob Davenport. Thanks for watching and have a great weekend.